Hello, welcome to another MarketBeat Monday. We are so glad to have you with us. I love to see some companies already coming in the chat. If you've never joined us for a MarketBeat Monday before, we are going to dive into a lot of the stocks that you ask us to talk about in the chat. It'll be a cold look at some of these stocks, but before we get into the names that you want to look at today, our MarketBeat analysts Chris Markoch and Thomas Hughes are here to break down some of the biggest market movers of the week so far. Guys, let's kind of start where we usually do, and that's with that heat map. What are we seeing at the market close today?
You, you caught me. I wasn't looking at the heat map.
I agree. Neither was I.
It looks like Nvidia was the hottest. Well, this is
Nvidia looks like a lot of the Mag 7 were down today. Kind of a mixed bag.
Mine says that Nvidia was down 89%.
Yeah, that one's not right. Don't look at that stat.
That's got to be a glitch. I'm like, what is going on with that?
That's a glitch. It's been there all day on the website. But yeah, there's
right.
The mega cap stocks are definitely down a little bit today in the heat map. But I think the overall sentiment of what's going on in the market today is not a whole lot. Some stocks are up, some stocks are down. Most of them are mostly sideways right now. And one of the biggest headlines that we're seeing as people are asking about the stock market this week, we're seeing a lot of noise, a lot of headlines out there about the potential of a market shutdown and what that could mean for the market moving into this week. What are your guys' thoughts?
Well, yeah, just like you said, and what we were talking about before, to me, it is kind of noise. I didn't even know when the shutdown was. I know it was kind of happening, but not when it was going to specifically happen, which I think maybe is Wednesday, you guys said. What I'm expecting is for them to wrangle about it. They might have a shutdown for a day or a couple of weeks or maybe even a month. It's happened before, but even in those times, there was such a very minimal impact to the data long term and to the market long term that if we get a shutdown and the market sells off, to me, it'll be a buying opportunity.
I think a lot of people would agree with that, Thomas. They're just waiting for that market pullback right now at this point. Chris, what are your thoughts on that potential shutdown?
Yeah, I generally agree with Thomas. It's more noise than anything else. Earnings are going to be the signal, and earnings are expected to come in better than expected, probably. So I think that's more of the market mover. What I think investors should pay attention to, or I should say just be aware of, is if the shutdown happens on Wednesday and if it goes longer than 24 to 36 hours, you're not going to have a jobs report on Friday. And if it goes longer than a couple of weeks, you're not going to have CPI and PPI like you normally do, because those are government reports, and those reports won't be done. So, if you're looking for that data, if that data is important to you, you're not going to get it. Should that really be a big influence on your investment decisions? No, it shouldn't. But just be aware that you may not be getting those economic reports like you're used to getting.
Before we move into a couple of specific names here, guys, I did have one other question. eHelp has a great question, and that's that the September effect didn't really happen. We didn't have the September slowdown that a lot of people look for in the market. October, traditionally one of the slowest months in the market. Do you think that we might actually see that, or is the market just doing something completely different than it normally does right now?
Well, seasonal factors, you can't really discount them. But right now, to me, the market is in rally mode. We're moving higher. So the movements in September, August, September align with that. And it looks like October will continue to align with that trend. So I'm expecting to see the market, if not move higher over the next month, then to move sideways. And there's really nothing in the charts that would tell me that wouldn't be happening right now.
Yeah.
Very good. Well, there's some really good names coming in the chat. Thanks again for everybody who's putting out some names there. Lyle, I love that you were here before we started to get some names in there. I'll get to your stocks right away. Another way for us to talk about your stocks first, if you've not tried this before, we're doing it new. It's a super chat. If you want to put in a super chat, we'll make sure that we get to your stock right away too. That's an option for today as well. Let's move on to a couple of the companies that you guys have been covering on MarketBeat.com, because there's been some good rallies. Thomas, let's talk about SoundHound first. That was a really popular article that came out just yesterday. Taking a look at their chart, it doesn't look like they're doing too much right now.
Well, right. There was some good news last week. They got a new deal with Red Lobster that really validates the business and puts them even more into the spotlight. This will be a full system-wide rollout for Red Lobster, so that's going to be a pretty good impact to their business. And so I would expect to see more follow-on business because of this, as other brands see the results in Red Lobster. The article was talking about SoundHound moving up to a new high and how high it might still go from here. And what it looks like right now is the market is struggling with some resistance. We hit that new high last week, but then we pulled back pretty hard at the end of the week, kind of showing some resistance around the 15.60, $16 level. But the trend is still higher. Momentum is still bullish. The market is actually still set up to rally. So once we get above this critical resistance level, I do still expect to see this stock rise up to the 20, 22, 50 levels, the way the analysts are pointing to. But it may take still a little bit more time. And we're looking towards this next earnings release as being a catalyst for a move, or the precursor for the catalyst to this move.
Yeah, it's an interesting stock we talked about plenty of times on MarketBeat Monday. If you haven't read Thomas's article yet, you can do that on marketbeat.com as well. Kind of a more in-depth look at SoundHound. Again, in a lot of these MarketBeat Mondays, we're just going to cover just the bare basics, looking at the stocks really quick. Some other stocks that are interesting moves right now that we've seen on this conversation a lot on Mondays. We're going to talk about IREN. We've talked about this stock before. We also want to talk about a new one, CIFR. This is one we haven't really talked about much on the channel.
Yeah. So Iron, I can take that one for you. The company was formerly known as Iris Energy, and the company is known by a lot of investors. It's known as a Bitcoin miner, and it still isn't doing Bitcoin mining. But what's been getting investors very interested in the stock and very excited about the stock is it's making a pivot right now, and it's taking the revenue that it's earning from its Bitcoin and it's using that to buy AI hardware like Nvidia GPU specifically that's going to go into the AI infrastructure. Currently, Iron says right now that demand exceeds their supply to provide it. And so that's been fueling a really big rally in the stock right now. And the chart looks really good right now. It's stock's well above its 50-day moving average. It's had some little pullbacks, but it's been just getting that higher highs and higher lows. And right now, the stock looks really, really strong. Like I said, the chart looks really good, even though it's trading a bit above its consensus average right now. But just today, Macquarie gave it a bullish upgrade from $33 to $55. And it's had a couple of other reiterations of $75 and $78 price targets in the last month. So this is a good one right now.
Yeah, it's a good company to talk about, and I want to talk about the next one too, just because it's a new one we haven't talked about before.
Right.
Cipher Mining, is this a competitor of Iron, or is it slightly different?
I mean, you would call it a competitor. This is another one of those Bitcoin miners that's now transitioning into AI, and it really makes a lot of sense. The Bitcoin mining is really very similar to AI needs. These guys have been building high performance data centers for a long time. Cipher Mining recently got a deal with Google, or Google took a stake in the company, I should say, that really validates their business and their plans for building out their data center pipeline. Right now, the charts are looking good. The analysts are bullish. So it looks like this one will continue higher.
Yeah, I think when we talk about this kind of stock, I also want to make sure we also talk about Applied Digital. This is one we talked about plenty of times on the channel, and the Cipher Mining sounds similar to that one. Is it different? Is it very much a competitor of Applied Digital?
I think they're all peas in a pod. They're all providing high performance computing, GPUs as a service to the big hyperscalers.
Yeah.
So ultimately, it's all the same. They're just providing the infrastructure for these really high performance AI applications, and providing the capacity that these giant hyperscalers need for the demand that they also are trying to meet.
Yeah, I'm pulling up the Applied Digital chart really quick. It looks like it did have about a 5% pullback in the last 5 days, but before that, almost 40% gains in just a month. Any reason we might be seeing a slight little pullback just after that huge run up?
Well, because of the huge run up, I mean, it's a perfect time to take profits. So yeah, when the stock is up since April, let's see, from $4 to 22, yeah, that's like a 400% profit. If you haven't taken profits by now, you need to, because this stock is up real big, and if it were to fall, you'll be real sorry not to have taken some profits.
Solid advice on that one. I know a lot of our viewers definitely got into this stock early on when we talked about it on the channel. So good advice, Thomas, on that one. Let's talk about another new company before we get to some of the names that are coming in on the chat. I like to see them all. This one is a new IPO. Chris, you wrote an article on Klarna
Right.
Group. What is this company?
Yeah, Klarna Group is it's a buy now pay later company, or at least that's the way it was kind of positioned when it went public. Stock went public, like I said, it went probably a couple weeks ago. It went public, and right now it's in the price discovery phase. So people will look at the chart and they'll see it's gone down sharply in the last couple of weeks, and it's just because right now people are trying to figure out what it is and should they get involved or not. And the premise of my article was very simple. Klarna is saying that it's not just a buy now, pay later company. It's trying to become a super app, much like you might see with Tencent in China. So that's what they're trying to do. And really, we're in that discovery phase right now. It's always a little bit challenging for investors to try to know if they should get in on an IPO or not, because there are some initial investors that can pull out after 90 or 180 days when the lockup period's done. So a lot of the success of Klarna is going to be depending on if you believe that they are going to be more than just a buy now, pay later company. I've given people reasons in the article to believe why they might be. Or if you don't believe that and you believe that really all they are is a buy now, pay later company, that may make the stock a little bit less attractive, because that is a sector where regulators are really starting to look at them pretty closely. But that's something for investors to decide for themselves. Right now would be the time to do it, because the stock's going to be chopping along down around that $10 range where it's at right now for a while. It's like I said, that's pretty typical after an IPO. It's a price discovery. Actually, I'm sorry, it's well up above $10. I'm sorry, but it's down from where it debuted at, and it's going to be chopping around for a little while. As like I said, there's some price discovery right now in the market.
Well, good. I like to hear new names on the channel. That's what we like to do. Now it's time to dive into some of the names that our viewers want to see right now. And again, we had somebody in really early. Lyle, thanks again for joining right away. He has two names to look at. That's MITK and FRD, Friedman Industries and Mitech Systems. Let's talk about those a little bit.
All right. So Mitech Systems is a software as a service company. They do ID and capture. One of their businesses is like remote check deposits, where you're able to take a picture of your check and have it deposited. What I'm seeing is nothing's wrong with the company, but there's a lot of things wrong with its market. The chart looks pretty meh. It's just moving sideways, not much moving it. Growth is slowing. There are some analysts bullish on the stock, but there's just two of them. The last ratings were issued in February, so not a lot of activity in that regard. You check out the institutional action. Again, real low. I mean, they're buying on balance, but they only own 12% of the stock. They've only bought a few $100,000 worth of shares. So just not a lot of market support. So this is a decent company, and it could go somewhere. But right now, there's nothing to really grab the market's attention to want it to move it higher.
Yeah. So Friedman Industries, Bridget, that's the FRD symbol. This is a specialized steel company. So it's fitting into that industrial category that is very hot right now. And the stock's been moving up sharply in the last month. I can see that that's probably from their earnings report, where they delivered strong revenue. There's some concerns here about the earnings, the margins, I should say, on their earnings. But the chart looks really strong, well above its 50-day moving average. Even if it pulls back, I think there's an opportunity here for investors. I like this. It's a company that does their manufacturing facilities already in the United States, which we know is a huge differentiator right now. So I like this. I had not heard of this before you brought it up. It looks like a strong company, especially in a sector where there's some concern about steel in general. But this is a manufacturer that they have their operations already here in the United States, and looks really strong. There is some margin concern, like I said, but
Yeah, these are names that don't come up that often.
Yeah.
We talk so much about AI, different kinds of stocks in there. We've got some more names like that to look at in a little bit. But I think I want to just talk briefly about this manufacturing sector a little bit. Are we seeing any kind of resurgence in this area? It looks like this company for sure. Are there other construction stocks or manufacturing stocks that seem to be doing well right now?
Um, I couldn't speak to any specific stocks at the moment, but I know that I think what I saw in the manufacturing data last week was pretty good. See if I can find that again.
Well, Thomas is
Yeah,
looking at Bridget. I mean, the
right.
heat map for industrials is red hot today. So most of the big names in industrials are up. So you're seeing Caterpillar up, you're seeing Deere up. So it's a good sector for investors to be in.
Right. The S&P Global Flash Manufacturing PMI was hot. It was 52.7, hotter than expected. That's expansionary. So, I mean, that shows that there is some money being spent in the sector and some growth. So we would expect to see that reflect in the stock prices. And I think what Chris said affirms that outlook.
Yeah, absolutely. There's a lot of green in that chart. I like to see it. Well, let's move on to a stock we are well familiar with, and that's AMPX. That's another one that people want to get an update on. It had a really good week before, really good month before, but looks like it's got a little bit of a pullback going on right now, Thomas.
All right. So there hasn't really been any new news that I've seen. And what we're seeing in the chart right now, it's just a natural pullback within this really strong bull market. Like you said, there was a pretty good, strong movement. It rose 45% that 1 week, crossed that critical resistance line. It's been pulling back the 2 weeks since then, but it's showing support at that resistance line now. Also well above the midpoint of that prior week's large move, well above critical moving averages. So it just looks like a natural pullback within a bull market that will result in a buying opportunity and another new high pretty soon. Like we said before with those other stocks, the catalyst for this move will probably be the upcoming earnings report, where we're expecting to see it affirm hyper growth and provide some bullish guidance with its pipeline and with its outlook for future revenue and earnings.
Before we move on, is this a pullback a good time to get in if you are bullish about the long-term outlook for AMPX?
Technically speaking, it looks like the stock right now is at a great entry point. As I was saying, it's pulled above a critical resistance, which was a previous high. It's pulling back now to that level and showing support at that level, which to me is a pretty decent buying signal.
All right, we're going to move to a couple different names. I'm going to give you some time to look at them before I have you talk about them. One was Rigetti. This is one we talked about earlier, so we can talk about Rigetti and some of the quantum computing stocks. And Chris, this is a new one, Poet,
Okay.
P-O-E-T. I haven't talked about this one before on the channel. I'm reading through the chat right now, and I love to see we've got a couple of first-timers. Thanks so much for joining us here for MarketBeat Monday. Again, let us know your questions in the chat. I'll get to as many of them as I can. We'd love to see you here for MarketBeat Mondays. Again, this is all about stock ideas. That's really what we're here for, is just trying to give you some good ideas of stocks to look at right now, some that are the biggest buys right now. Our website, marketbeat.com, really all the same thing. Right now, we have a brand new article out. If you haven't seen this one yet, this is just for YouTube viewers. You can scan this QR code, click this link that we'll put into the chat here in just a minute. It's about 5 EV battery and lithium stocks. So speaking of AMPX, these are really similar to those kinds of growth stories. You can go ahead and check this list out totally for free on marketbeat.com. We are all about resources for individual investors, much like yourselves. So let's get to these companies. Let's start off with Rigetti. What are we seeing in quantum computing right now? Chris, do you want to take Rigetti?
I was looking at Poet, but
Yeah,
I can look.
Thomas, you take Rigetti. You can talk quantum computing.
Let's see what's going on over there. I was looking at Poet too. Rigetti chart looks pretty strong. Definitely set new highs recently. It is also pulling back from its high. So I would wait and see where it's going to confirm support. Right now, it looks like support is above 2850, but it could possibly pull back beneath that level. I don't think the news cycle has changed very much since last week when we were talking about it. They're all trying to accelerate their roadmap, but there's really not been any major, breakthroughs recently. Let's see what the analysts are doing with this one.
Thomas, I do want to ask about Rigetti and the whole quantum computing realm. There's been some investors saying, oh, we're back to that meme stock phase where these quantum computing stocks are just in the headlines and it has everybody rushing to buy them. But kind of like you just said, there's no real new developments right now that's spurring this new excitement, right?
No, it's really just, the anticipation for this technology to bear fruit. I think that there has been an acceleration of the timeline to where we think they'll make a breakthrough within, a few years versus a decade or more, but still we're quite a long ways off. And then they're still going to have to start making revenue. So that really is what puts the risk into this one. Like the analysts, there's 6 of them tracked by MarketBeat. They all rate as a buy. That's pretty good. However, the $20 consensus assumes a 35% downside, and the stock is trading very near the ceiling based on their target range. So it's possible that Rigetti could pull back pretty significantly from this level. And even looking at the chart, there are some good signs in the chart. But if you guys can pull it up at home and follow along with me, look at the weekly chart, you can see that the volume spike that accompanied this most recent new high is smaller than the volume spike that occurred earlier in the year and in the last year. Again, the MACD spike is also pretty good for this most recent price spike, but it's diverging from the market. The stock price made a new high. The MACD did not make a new high. That's a sign of some underlying weakness. And to me, that really raises the risk that this stock will make a significant pullback when it does pull back. And you could possibly see this one move as low as $20 or even lower, depending on how the news cycle develops and how the outlook for revenue and earnings develops.
Yeah, one of our viewers, Sasha and Savisha, just said all of the quantums were down about 5 to 6% today. Interesting to hear you say that there's potential for an even further drop. If we do see that drop, that could come with this sector, which we've seen that volatility in quantum stocks for the last year or two at least. Would you get into them still? Is it still early enough that you'd be looking for a significant pullback in this area as a time to get in on these stocks? Or do you like to play them when there's the momentum, when there's actually some buying behind them?
Well, I think that you could still get into these stocks, but the way it's set up right now, I would be waiting for the pullback to happen, and I would want to see a big significant pullback and a really solid show of support, because right now I'm looking at the short interest, 16%. I mean, that's not astronomical, but it's pretty high. It's high enough to cap the gains. It's high enough to get the market to fall pretty significantly, given a proper catalyst. And that might be simply the fact that people stop buying. If there's nothing to drive them to want to buy the stock, there's no reason for the stock price to stay up where it is. And if the short sellers keep piling in, the data shows that the interest has been rising over the last few months. If they keep piling in, the stock has no place to go but down.
Yeah, really good point. All right, let's move on. We want to get through as many of these names as we can. I'm excited about Poet. This is a new one we haven't talked about, and it looks like pretty close to a penny stock.
Yeah, I'm going to let Thomas talk about the chart on this one because he's going to give investors probably better information on that than I can. But so the story behind this stock, Bridget, it's pretty interesting. It's a Canadian company. It's trying to solve a problem inside of AI data centers, and that's that it costs a lot of money and time to move data inside the data center. And so Poet has a proprietary technology called Poet, their optical interposer technology, and it's designed with the benefits of reducing power consumption while boosting speed at the same time. Now, that's the bullish part of the argument. Now, here's where it gets a little trickier for investors. This is still kind of a lottery ticket. Very minimal revenue. It's not profitable yet. High risk, high reward. Right now, analysts are pretty bullish on it. They're giving the stock, let's see, about 13% upside. So that would be about $6.25 from where it's at right now, which is about $5.50. So again, just to advise investors, high risk, high reward, small cap stock, not profitable, but it's trying to tackle a problem that if it's successful at, that's a big deal with data centers.
Right. And to follow up with that, they're making these mixed signal semiconductors, or a solution that will allow manufacturers to create mixed signal semiconductors that combine electronic and photonic capabilities and using lasers to send information across data centers to speed up and improve efficiency and cost. Again, that's fantastic, and they definitely need that. As Chris was saying, it looks like, revenue looks pretty spotty right now. Definitely not profitable. Outlook for that is, let's see, not a lot of forward estimates and not a lot of expectation for revenue growth or for profits right now. The market has been ratcheting higher, but it looks to me like there's a ceiling right around $6. That's been in place since 2023. 1, 2, 3, 4. We're on like the 5th test of that level right now. It looks like it's holding. The indicators are looking kind of weak. So I would expect to see this market continue to be soft in the near term, if not to pull back potentially to $5 and the easy bear case scenario, and possibly down to $4 in the raging bear case scenario.
Very good. Well, let's move on to some other names here. I like to see coverage on a new stock. It's good. Another one that people want to hear about is ANET. I know we've talked about that before, but let's pull up ANET and see what's happening with that chart right now. And then another one I'm going to have you guys look at here in just a minute. SPRC, we've had a couple of times, SPRC. And then it looks like Oklo, some of the nuclear stocks too. So we'll get to some of those in just a second, guys. Let's go to ANET. I think, again, we've covered this at least once before on MarketBeat Monday.
Yeah.
You're right. So cloud networking solutions, that's
high-speed networking.
I see a pretty high valuation right now, trading 50 times earnings. Let's see what the forward outlook looks like. Looks like there could be, right, we got some valuation concerns today, but the outlook, the forecast put this stock at under 10 times earnings in only 4 years. Double-digit sustained growth, widening margins. To me, that's good. All right.
I'm looking at the chart right now, trying to get a feel for that.
Looks like there's some chatter that Oracle's strength will benefit this company as well.
Interesting.
Networking, well, right. So it's networking, data centers, clouds, AI. Everybody that's building data centers is going to need to use some networking products, networking solutions. So that all sounds very good. The chart looks good. Chart looks real good.
Chart looks really good. Looks strong.
Pretty strong. Strong rally, sell off in the spring, V bottom, strong rally since then, hit new highs, consolidation, new highs, convergent MACD. Only thing that's really missing is a really good noticeable spike in volume, but volume is still pretty high, so that's pretty good.
Yeah, good to see. All right, we're just rapid firing through some of these right now, but it's at least a good quick look at some of these different companies. Well, let's get to the other one. Have you heard of that one before?
SPRC?
Yes.
SciSparc?
Yeah, I have not heard of it. I'm looking at it cold. But
a clinical stage med tech company, extracorporeal, shockwave-based neuromodulation devices. Oh my gosh. Shockwave technology to stimulate neural tissue. They're shocking people. That's shocking.
This is my favorite part about MarketBeat Mondays, is coming a blind look at a company you've never heard of before, getting a new look at what's happening. I've got the chart pulled up here. It looks like year to date, not that strong, but they've seen a big rally.
All right. Well, the chart looks horrible.
Yeah.
The chart looks like it's had several reverse stock splits, which that to me already says to stay away from it. You're facing so much overhang in the market right now that there's almost no way that the stock price can advance.
It's kind of odd here. I'm looking. They recently announced that they were going. This isn't for context. This is an Israeli company. They're focused on developing cannabinoid technologies for treatment of central nervous system disorders. They're planning to merge with Automax Motors, an Israeli car importer. So yeah, there's a lot of noise around this one. Not exactly sure where that's going.
Yeah, very, very interesting. Different company we haven't seen before.
And short interest is about 30%. So that might just be a good one to stay away from right now.
Totally. This looks like a train wreck that's unfolding in front of our eyes. If I can make an analogy, this chart and the story that I'm hearing, completely unrelated industry. Well, maybe not, because you got the automotive thing coming in the picture.
Right.
Mullen. I mean, Mullen was a chart that looks just like this with numerous reverse stock splits, and I mean, it just went down. I would stay away from this one.
Well, it's a good one to avoid. That's a good thing to come up. You come up with ideas of things you want to buy right now and ideas of things that might be better to avoid. That's what this is all about. Let's look at some of those nuclear stocks really quick.
All right.
Oklo we talked about last week.
Right.
Charts being slow. Just pulling that one up. I haven't seen an update. Looks like it's down almost 11% in 5 days. So some strong reverse or changes since we talked last week.
Right. The outlook is still pretty bullish for this stock, but there's been some caution entered the outlook, with a couple of analysts kind of downgrading from buy ratings to hold equivalent ratings. Didn't reduce their price targets. Price target trend is still higher, but they're just kind of raising some caution because of how hot the market has gotten, how much it has advanced in the last few months, and the fact that the company is still really pre-revenue. But on the flip side, the company is also still strengthening its pipeline. The outlook is still very bullish for this market. Technically speaking, we've got a pretty solid looking pullback right now. But again, as I was saying with that chart earlier, this pullback is finding support above the midpoint of the very large candle that happened prior to the pullback, a Harami pattern. In this case, it looks like a Harami continuation signal. So assuming, no really bad news comes out and that we continue to see this pipeline developing, I would expect that after, X period of sideways consolidation, that we see this market eventually move up to set a new high again.
Really interesting company. I think we've talked, if you haven't seen the most recent video, we have another nuclear stocks video on the channel too, so make sure to check that one out. We go into a lot more of these different companies out there too, because the sector had kind of seen a big resurgence over the past month or so, so a slight pullback in the sector is interesting to see right now. Let's cover some different names. There's so many different names coming in. I'm going to get to some more of yours. Somebody wanted to hear about just like regular travel flights, seeing if those are doing well. It reminded me of the stock that we were going to talk about earlier, because this is not my favorite stock, but it's absolutely my favorite company, and that's Costco. So let's talk a little bit about this stock. Thomas, you had a really interesting article come out about Costco this week, especially heading into the holiday season. What can people look at for Costco right now?
Well, they reported earnings, and the report was good, industry leading. They've expanded their network. They grew comp sales, expanded their customer base, and they generated, again, really significant cash flow. Their cash balance has built to a point where we can expect them to issue a special dividend. Based on the past history, that could come in December, and that was the gist of my article, that investors could expect a special treat in December. Not a guarantee that it will happen, but it looks very possible. If it doesn't happen in December, it will probably happen, shortly afterwards, within the next, few quarters, because the cash is there, the history is there. There's not really much else they can do with it. They are planning to accelerate their CapEx a little bit next year, open some more stores, but that's not going to use $15 billion. So they've got plenty of money to do this with. I think that it could equal the last special, which I think was $1.50 or $15 per share, which is a pretty significant payout to come just all at once in a lump sum. So, with that in the picture, there's a lot of support for the stock. And I would think over the next, few weeks, we might see the market start to heat up a little bit with dividend scalpers and dividend, anticipating investors buying in before the special is announced.
Yeah, really quick before we move on to a couple other names here, I think that it's interesting to see that Costco is trading towards the lower end of its 52-week range,
Right.
and it's still so high. It's still up above $900. Also, analyst forecasts put this at over $1,000, almost $1,100 company.
Well, right.
Thoughts on that?
Well, the analyst trends right now are putting the stock in the $1,200 to $1,400 range. So that's like a 40, 45%, almost 50% upside from where we are right now, which is pretty good for any stock. But because this stock here is trading at $900, heading up to above $1,200, we've talked about this before too. There's a very high probability, good chance that they could do a stock split because at $1,000, it's hard for people to buy shares. This company is going to be like other companies, and they're going to want to make their shares accessible to their own employees, and as well as average investors. And the best way to do that is to do a stock split.
Interesting. I'm curious to hear from people in the chat. Let me know. Do you care about Costco? Is Costco too boring for you? Or are these companies and stocks that you're looking at too? Let me know in the comments what you think. All right, here's a couple of other names that we want to get into really quick. We have MU. We can take a look at that. Chris, why don't you take a look at that one? And then LAC, Lithium Americas. We had a couple people ask about that. Ooh, Damon, this is an interesting one. Kenvue, the Tylenol parent company, that's an interesting one to look at right now,
Bridget,
too.
did you say M or N?
Good question. MU.
NU. Okay. I wanted to make sure because they're both stocks.
Yes.
But they're very different stocks. So I wanted to make sure.
Yes. Micron Technology. We've definitely talked about this one before.
Right.
Pulling up the chart, it looks like it's been a strong month for this company.
Yeah. So with Micron, what you're really getting into is I don't know if this is the right phrase for it, but really what we're looking at is, I wouldn't say it's the next wave of the AI trade, but it's a different part of the AI trade because they're dealing in memory and data storage as opposed to the like Nvidia, which is providing all the GPUs and things like that. They're doing the memory and data storage. I pretty sure I didn't follow their earnings closely, but I think they just had earnings not too long ago.
Who, Micron?
Yeah, Micron.
Oh yeah.
No, they've had them back in June, so they should be. Yeah, very, very strong earnings. It's a stock where a lot of people are. I mean, the stock went like really shot up in September. So it's been up 37% in September.
Well, right. Because the report, affirmed the AI demand because Micron makes the HBM memory that's being used in AMD and Nvidia GPUs.
Okay.
So they had a really huge beat, accelerating revenue, huge profit beat, and also raised guidance, all aligning with the booms that we've seen in Nvidia. So that's what's driving that market there right now.
Good. All right, let's move on to LAC. We've had a few different people asking about this one.
Right. Well, LAC right now is mostly benefiting from the Trump bump. Apparently, the administration is wanting to get a stake in this company, and if they don't, they're still talking about a loan to help it boost its production or to get it into business because it's not even making revenue, not even making revenue yet.
Right.
So this is looks like an investment in a startup, but good projections. Let's see this, good projections, and with the
yeah, that's a heck of a bump.
Yeah, right. Supposed to be making money, revenue within the next 2 years. Solid growth for the next 5 to 10. Profits by the end of the decade. I mean, it looks like a decent startup, and it's getting a tailwind from the Trump administration.
Yeah.
Now, is that just because the bump? Is it because they're looking to get more of the mining or whatever it is that they're doing? Right. This is a mining company. Is that right?
The lithium miner.
Miner.
Yeah, it's right in that area that we want to be able. We meaning the United States wants to be a place where we can start getting control of our own supply chain when it comes to minerals like lithium and so
Yeah.
That's why there's the interest there, because lithium's going to be needed. EVs, renewable storage, data centers, all of that. It's just going to be a need, and
Well, we have
lithium.
batteries everywhere.
Yep.
Batteries everywhere. I feel like we've talked about a whole bunch of battery charts right now. Speaking of the Trump effect, let's get to Kenvue, KVUE, parent company of Tylenol.
Right.
What an effect! Wow, that chart is down so much right now. Thoughts on whether now is the time to buy the dip, or do we see a turnaround happening anytime soon?
I would think that maybe it would be a time to buy the dip, unless somebody comes out with some evidence that proves that Tylenol does what they say that it's doing. But I think what will happen is it'll take some time for the brand to regain some strength, because certainly people will stop buying it no matter what the reality is. So this might be a wait and see moment.
Yeah, I am curious. The wait and see part that I'm interested in is earnings. So what is this going to do to earnings next quarter, 2 quarters from now?
It's not going to have anything to do with what the company's going to report for earnings, because that's already baked into the stock pretty much. I mean, the quarter I think would be closing about now. So I mean, I don't think they report at the beginning of November. I don't think anything that happened last week with that announcement is going to affect their current earnings. I would be thinking that the earnings report is going to give the company more of a platform to address the issue for themselves if they so choose. I agree with Thomas. I think this could be a buy the dip opportunity, unless there is something that comes out that substantiates that in a big way. I just don't really. I think the sell-off is overdone.
Yeah, I've got the analysts pulled up right now, and just some of the recent ones. You've got looks like just Rothschild's for sure issuing a strong buy on this, reiterating some pretty strong price targets. It looks like so, and that's all just just last week.
Yeah.
What I'm seeing is set target, upgrade, reiterating, lower, upgrade.
Yeah, it's just going to me, it's a stock that you're going to have conviction on, Bridget, because obviously the news that came out was scary, and it's something that if you put credibility to that, then that's damaging for the company. But I think the company's going to come through this just fine, and that would mean that the stock is probably a very good buy at this point, especially because remember, it gets the halo of being a dividend king with Johnson & Johnson. So it's got right now with the dip in the stock price, it's still got a 5% yield.
Yeah.
Interesting.
I just want to point out one thing. I'm looking at the analyst activity here on MarketBeat site, and it is showing 3 positive activities on the 26th, which would be following this news. But I want to point out it's the same 3. It's Rothschild and Company, Redburn, and Rothschild, Redburn, and Redburn Partners. It's all the same analysts. So it's really just the same. It's the same upgrade that got issued through like 3 different branches of the same company. And
yeah, that's
showed
really
up showed up as 3 different upgrades, but it's really just one upgrade with one target, $22.
Yeah.
That is a 35% upside. That's pretty good. And I think he's banking on what we've been saying is, I mean, there's brand strength. There's more business than just Tylenol. There may be an impact, but it will probably be short-lived. And over time, the company will most likely recover.
Yeah.
Very good. Well, we normally only go until about 3:50, so we're getting close to that point. I'm going to pick a couple of other names here. If there's something you really want me to cover right now, do that super chat thing. If you've never tried it before, you can put in a buck or something, and it'll pop it up so I see it right away. So that's an option for right now. I think I'm going to pick about 2 or 3 more stocks, and then we'll wrap up our conversation real quick. One of them, just that I had pulled up recently, it's ET. I just randomly picked that energy transfer. It looks like covering the energy sector a little bit more would be good. There's quite a few different names in that area that people were looking at. Right. This one, the chart doesn't look fantastic. It looks like it's had kind of a rough year to date for sure.
Well, right. So this one is sorry, Chris. You
go ahead. No, go ahead, Thomas. Go ahead.
It's a middleman. It's an oil middleman, and to me that's good. They make their money based on volumes and storage versus the price of oil. They have some fluctuations tied to oil, but it's more about the cash flow. And with natural gas, there's kind of this weird yin yang thing going on. I guess that's might not be the right way to describe it, but the low oil prices is kind of hurting the producers because they're not making as much revenue by selling it, but it's driving demand because it's cheaper for businesses to buy. And that's good for the pipeline producers because they've got to collect it, transport it, liquefy it, and then pass it on. And they make their money doing all those things.
Yep.
Interesting. Good one to look at. All right. Michael, you're here all the time, so we'll get to you. He wants to hear about some airlines that are still making profits.
Okay.
And any thoughts on some airlines?
Okay. He doesn't have tickers. Delta would be my name. If I don't generally, I don't generally buy airline stocks or trade them.
Right.
But if I were to look at one, I would probably say Delta would be the one I would be looking at.
That's the one that came to my mind first. I know there are others, and they're not all horrible, but a lot of them struggle.
Right.
Delta's been doing pretty good. The stock price is having a hard time with traction because market sentiment is going one way one day and the next day. But through it all, the company is still making money, generating cash flow, paying down its debt, paying its dividend. So a good one to own over time. If we get another one of these crazy sell-offs, when it hits the floor, I would buy some and, buy it as it ratchets higher. Watch out for some resistance points because they may trigger sell-offs and give you another chance to buy more. Right now, it looks like strong support's probably around $55 or $52. There could be resistance around $65. But that said, I think the cash flow and the capital return is probably pretty safe.
All right, very good. We've got a super chat. Thank you for doing that. Tanya, we've got Pew and Fig, and I think this was a question earlier. They are new investors who just started investing and wondering if they should sell at a loss at all. I'm going to pull these up. I haven't heard of either of them off the top of my head. PEW and Fig, FIG.
All right. Well, without talking about these names specifically, you should be prepared to sell at a loss because when you start losing, you need to trim that before you lose even more. Generally, what you're going to want to do is decide how much of a position you're willing to risk and set stop losses at those levels so that when the market pulls back, you don't even have to think about it. It just happens. Right now, looking at this chart, it says Grab a Gun Digital. I don't know what they do, but the chart looks horrible. I mean, it hit resistance at 18. It sold off real hard with a volume spike. The market's been moving lower ever since. We're moving lower today. Not something that's telling me I need to rush in and buy it or even really to know what's going on with it. Let me look at the news flow and see what's going on here. Grab a Gun Digital. What do they do?
Yeah, I'm sorry. I'm struggling to find the chart right now. I'm looking for it, and I'm not finding that ticker.
So let me, Bridget, I'll jump in while you guys are looking for that. Figma, I think, is the other one you were talking about, FIG.
Right.
So the one thing I'll say, just looking at this, because this is another company that I had really heard about, and I can tell you why. It's because this is another company that just went public. And when I say like it just went public at the beginning of August, stock's down from like its IPO price was over almost $120 per share, and it's gotten cut in half. So again, what I would say here is for people that are new investors, and I wish that they had somebody point this out to them. IPOs are super risky, especially for a new investor. There's a lot of price volatility, especially at the start. This is one that, depending on when you got into Figma, I might consider just getting out of it, selling it, taking your loss right now, and looking for other places to go because, Figma, I don't know what the long-term story of this one was, but again, it went up to 120 right after the IPO, and now it's down, almost getting cut in half. And analysts are looking at a price target of around $67. So potentially you've got about another 27% upside, but I don't know where these people bought the stock at. So to me, this is one I might just say, sell it now, look for some better ways to take the capital that you have remaining. IPOs are super risky, like I said, especially for young investors or new investors to the market. They look very enticing because of the story, but they can be very volatile.
Yeah, I want to one quick question on the Fig follow up here. Is it normal for a new IPO like this to get 10 analyst ratings so quickly? That seems like a lot for a new IPO.
It depends on the company.
Yeah.
True.
If it's if it's an interesting name with a good market, 10 analysts is a low number. Ooh, that chart looks pretty bad too. Yeah, it looks like that one sold off real hard, been falling, and now what I see is a bear flag, which is the opposite of a bull flag. So 80 to 50. Wow. All right. Technically speaking, this stock could be in the $20 to $30 range pretty soon. So I would be careful with this one.
Solid advice, guys. I love to see it. I see so many other names here. I wish that I could get to more of them. Thank you, everybody who asked some questions today. We're going to wrap up with just quick thoughts on things that you are watching this week that could be potential market moves no matter what stock you're holding this week.
It's the labor data. This week is the monthly labor data. We're going to get an ADP, Challenger, and NFP on Friday, and it'll be a market mover.
Yeah, that's if we get the report. Because again, I'll go back to what I said at the beginning. If the government shuts down for probably more than, let's see, if the government shut down midnight on Wednesday, if it's probably more than 24 hours, you're probably not going to get the labor date. You probably won't get the You probably won't get the jobs report, which that'll be interesting in and of itself. But I think that would be the move this week. But again, I would just tell investors, focus on earnings. They're not going to start for another couple of weeks, but earnings are expected to be strong. Earnings is the signal. The rest of it's just the noise.
Right.
Solid points. We will be watching it all here on MarketBeat. Doridio, sorry I didn't get to your stock this week. I'll make sure to get you next week. Thanks again for watching, everybody. And if you are interested in healthcare, I know that's the hold-up discussion with a lot of this looming government shutdown. We have a really interesting healthcare discussion on healthcare stocks to buy right now. That is coming out on Wednesday, right? The date when we'll find out if the government shutdown is happening or not. It's a really great discussion. Again, that whole sector has been kind of beaten down this year. So if you're interested in more, make sure to watch Wednesday's video too. Thanks for joining us here, everyone. We love to have you join us on MarketBeat Mondays. As always, everyone, happy investing.